Hey, what's going on, guys? This is Dan Bustamante at Landshark Education. So in this short video series, we're going to start creating for 2017. We're going to start with, and we're going to go over this short kind of class and give you an introduction to what is day trading in the markets, right? So if you've looked at day trading before, if you've done this before, if there's something you've meddled in, and tried it, let's dispel. Let's do a good job of dispelling a lot of rumors, and then we want to give you some insights to our philosophy at Landshark. I'm going to give you some insights how I personally trade, and I'm going to walk you through what is needed to actually day trade in markets. Right, so let's get started with this and we'll go through this. So if you look on YouTube, if you look at and you type in on Google or YouTube, wherever it is, you pick up any book, everybody has an opinion on what day trading is, right? Everybody has their own strategy, their own set of how they do this, and it makes it hard to know which way to go. Right? I'm not saying our strategy is the best strategy. My personal strategy is the best. What I'm saying is I stick to a strategy. It's worked for me. It's worked for others. Right? And we want to discuss this. But I think if you talk to any one of these day traders, whether they've been professional, they're an educator, whether they traded on the floors at hedge funds, if they're money managers, right? They're going to tell you there's one common trait, whether you're a day trader, a swing trader, or just market speculator, that makes everything work. It's volatility. So volatility in the markets is what we need to make money from these markets. When stocks don't do anything, when they trade sideways, it makes it very tough to take an income from those stocks. Right? And we're going to dispel some rumors and we're going to classify what type of investor or person you are as you go into the markets. Because some people can buy a stock like Ford or Johnson & Johnson's or JCPenney or one of these blue chip type of stocks, and they just buy hundreds of thousands of dollars worth of shares and they get the dividend. That's how they make money. Right? For most of us watching this video, and I'm assuming here, I'm going to take a leap here and say most of you are trading with $10, $20, $30, $40, $50,000. Right? If you're really, really good at trading, I doubt you're on YouTube looking for videos to do this. If you're already super, super wealthy, I also highly doubt you're looking at videos to learn how to make more money in the markets. Right? It's not to say that you couldn't be doing that, but let's talk about this and let's kind of talk at a certain level to what we're doing when we're day trading the markets. So most people think that you just have to day trade stocks. Right? This has been something that's been ingrained in us forever. Right? You want to buy a stock and you want to hold it and it's going higher. Right? Apple iPhone's coming out, so you think Apple's iPhone is going to produce sales, so then you go and buy the stock. Right? The worst thing that can happen for a new investor, a new trader, is buying something because they have an idea, it goes up, and they think that that's their strategy. Right? Well, that couldn't be further from the truth. Right? I saw this recently last year. I had a friend call me when Chipotle shares were trading lower. Everybody remembers Chipotle had the huge E. coli situation. The stock collapsed. It was keeping going lower, and he goes, look, you know what? I think this is going to blow over. And I go, look, you might be right on this. I don't think you are. I think the price chart's saying something different. But you want to put $100 and some odd thousand into this trade and hold this. Why not just buy options on this? Right? He didn't actually buy the options or shares, thankfully, because the stock was traded lower. Right? But that was his entire premise for making an investment. Right? We're going to talk about mishaps that a lot of new people getting in this industry have. Right? And we'll go through this. But that's one kind of concept people have, is that you can only buy stocks and go higher. It's just not the truth. Right? We can trade stocks, options, futures. I don't like to trade Forex. We don't teach Forex trading for other reasons. And you don't just need to buy stocks. Right? You can bet against the market going lower. If you look at 1987 and the market crash, one of the largest crashes ever in the stock markets, Paul Tudor Jones made a lot of money shorting or betting against the market when it fell that day. Right? For myself personally, the biggest trades I've ever had, and I'll talk about it later as we go through this class, have come from being short or betting against stocks before earnings happened and the stock kind of collapsed. Now I say this and a lot of people aren't going to agree with this. Right? This is just what it is. Right? The people that don't agree with this, and you're always going to have cynics or people that will discuss against and say short selling's bad. Right? It's a conversation for another time. I'm not interested in that conversation. I'm interested in trading the markets and being a market opportunist. But you can bet against the market. If you look at 2007, 8, 9, right? John Paulson, some of the biggest hedge fund managers in the world made a lot of their wealth betting against the markets. Was it good or bad? That's, again, another debate for another time. But the point I'm trying to make is you can make money from markets, not from just betting stocks that are going up, but betting that stocks go lower. Right? And right now in this current marketplace, where the entire stock markets across the world are just vertical, right? It makes it very, very viable to bet against stocks, right? You can trade the futures, you can buy puts, you can do a whole slew of things to basically make money from markets. So let's discuss this next concept. People always ask, how do you find stocks to trade? So let's discuss this topic about day trading in markets and finding stocks to actually trade. Right? So there's a lot of rumors and myths and kind of misconceptions with this one idea. Right? There seems to be this concept that there's always some new stock to trade or some new hot topic to trade on stocks. Right? For prop traders, for people that trade on prop desks or professional traders that are literally purely day traders, this is something they kind of focus on and do. Right? For myself personally, it's not something that we do. It's not something we even teach. And I'm going to explain to you why you can get around this and get away from this notion that you have to worry about what these companies are doing. So there's a really easy way to keep this simple. You can just simply trade exchange-traded funds. If you don't know what exchange-traded funds, we're going to do another video on that and discuss that. But an ETF is a really, really simple vehicle that almost trades like equity. It's essentially almost a ticker, right? SPY, IWM, GLD, volatility, TLD, to name a few. Right? You can just trade those ETFs instead of just trading a new stock each day. You can trade the options on those exchange-traded funds, which is something I do all the time. The second thing you can do is you can pick 10 momentum stocks or 10 Momo stocks. And I'm going to explain to you why my personal strategy has a lot to do with momentum-based stocks. So stocks like Apple, Amazon, Google, Facebook, Priceline, Chipotle, stocks like that. Stocks that are widely held by institutions. Right? Large institutions control markets. You'll hear people discuss this, right? And they'll discuss that they call them big boy traders. We kind of have an inside joke on this, right? The big boys are moving the market, or, there's other concepts here. Institutions drive the markets. My strategy, what we teach, relies heavily on institutional movement in the market. So number 3 is, and this isn't trading stocks, but you could trade S&P mini futures. Right? Really, day trading stocks for the most part is something that's kind of been left back in 2000. Right? A lot of guys traded in 1995 to 2000. Phil Naftalin, who works at Landshark with it, owned a prop trading firm in Scottsdale, about 100 traders, and they traded stocks. They traded stocks. That was his business for many years. Right? With the involvement of high frequency trading, it's very tough, almost close to near impossible to day trade stocks. I have never day traded a single stock in my entire life. If I day trade in crude oil futures, S&P futures, yen futures, soybean futures, or something like that. That's how I actually day trade. That is day trading. You place a trade, you're out in 1, 2, 3 minutes, maybe 2 or 3 hours. Right? Day trading has evolved. What has not evolved is this pitch that you're going to see on YouTube and other places that you can keep day trading stocks. Right? So if you try to day trade stocks, right, and you'll see a lot of videos, we're going to get into this as we keep progressing, you're going to run into a lot of issues, right? And I'm going to explain to you some of those issues as we go through this. So let's talk about my preferred strategy. Let me give you some insight to what I believe and what I like to do in the markets. So what is my preferred strategy? Right, so first and foremost, I know what my risk tolerance is. I know what size accounts I trade with. Right, if you have $15,000 and you want to go buy a piece of real estate for an investment property, your choices are pretty limited. You're probably stuck to a small house, a condo. It's very tough. Now, if you're investing with $500,000 for real estate, you could probably get just commercial properties, a couple properties, get a more expensive condo, remodel that condo. So your choices to bring in income are a little different. This is exactly the same with trading in financial markets. So if you have $5,000 or $500,000, your choices of what you can trade are different. And most people, right, aren't trading with that kind of money. If you're trading with 5, 10, 15, 20, like I said, $50,000, that's one of the reasons a lot of people try and day trade stocks or use penny stocks or use margin or go to an offshore broker and get 4 times leverage, right? All these little side back alley ways, right? And they usually end up in despair. So what's my preferred strategy? First and foremost, I trade E-mini S&P futures, I trade crude oil futures, and I trade equity options. Right? So there's a little tip here I want to discuss. So day trading stocks is hard. It's really, really hard to do. Right? I don't know anybody that successfully day trades stocks. I will swing trade a stock. I'll buy shares and hold it. We've had students that'll swing trade stocks for 3, 4, 5 days. Last year, we swing traded oil for like 6 months on a few oil stocks. I don't know anybody successfully over time that can day trade stocks in and out. Right? Futures is more of a day trader's product. If you've never traded futures, it's hard to explain them, and we'll do another video on that. So I really use momentum stocks to follow institutional order flow. Right? And I'll discuss what I mean by this on this next slide. So what else do I use in the market? I use price patterns and technical analysis. That's it. Right? So when I look at potential to buy or sell a stock or bet against a stock or bet against anything, I look at a price chart in the marketplace. Right? These price charts give me what I would consider support or resistance or supply or demand in the market. So I only trade institutionally held penny stocks, or institutionally held stocks. No penny stocks, rather, right? In fact, a lot of institutions don't own penny stocks at all. Right? So there's a reason I do this. Right? For a lot of you that are trading in the markets, right, and a lot of you may have fallen into this kind of trap, is you see the Wolf of Wall Street movie. If anybody doesn't know about markets, they see this, and that's your first kind of idea to go to, is I want to trade penny stocks. Right? And there's a lot of people that do this, and it looks glamorous, and you think you can take $1,000 or $1,500 and turn it to a lot of money. Right? There's a smarter way to slice the bread, so to speak. If you're only trading with $1,000 or $1,500, or this is your last amount of money, I'm just going to be really, really clear with you. You should probably not be trading at all. You should focus on making more money, building up your money, paying off your debt, and then come trading in the markets. Right? I hear a lot of people saying, hey, I've blown up accounts. And I ask them, I was like, what do you mean you've blown up accounts? How big? Like 100,000, 250 grand? I mean, geez, like if I blew up my account, I'd be pretty upset. They're like, oh, I've lost 2,000 or 3,000 here and there a couple times. That's not blowing up an account, in my opinion. That was you trying to come in and start a business, underfunded, undercapitalized, and thinking you were going to hit a home run. And every time you do it over and over, right, you're trading the wrong products. So let me show you. I wrote a blog post a while back on this concept of penny stocks are good or bad idea. And I'm not taking a shot at penny stocks. Maybe I am. But I want to discuss this. So earlier last year, there was the stock Dry Ships, right? If anybody knows what Dry Ships is, this stock was trading for $4.43. And it went to like $85 all the way up to $110 in a matter of 2 or 3 days. Right? What this creates is mass hysteria. If you're part of the masses that fall into this, you're the people that hold the bags or provide liquidity in the marketplace. Right? Do these stories happen? Sure. Every once in a while. Do some people just simply trade a strategy looking for a home run and take shot after shot after shot after shot, and maybe they finally hit it? Sure. Right? To me, that's gambling. That's not a repeatable process you can actually make money in the markets with. Right? If you're trading with $250,000 and you want to put $5,000 or $10,000 into small speculative penny stocks and hold them, and maybe some news comes out 3, 4, 5, 6 months later, and you make 400 or 500%, awesome. But if you're trying to do this and bring in income or build an account or have an extra kind of side kind of hustle on this, it's very tough to actually do this. So let me talk about what is the reason with penny stocks and why there's an issue. So I trade institutionally held stocks. What you're looking at here is the major holders for Chipotle, which is one of the stocks I've been trading for 6-7 years, pretty much off and on. So 93%, almost 94% of Chipotle is institutionally held. So what this means is all these funds, right? I'm going to pull up Yahoo Finance here briefly. I'm going to show you PCLN, one of my favorite stocks to trade as well. Right? If you just go, you can actually see it. If you go to the holders tab on this, 97% of this company are institutional holders. Right? You have Vanguard, FMR, Price T. Rowan Associates, massive hedge fund called Tiger Global Management, full of some of the best traders in the world, and all these major institutions. So what happens is when these institutions redesign their portfolio, let's say they want to rebalance a portfolio, right? They want to sell out because they think next quarter's earnings aren't going to be as hot and they need to take some profit off the table. When they move orders in the order book or they adjust their outlook, their order flow, their buying and selling moves the markets. This is the same concept as Costco or Walmart going to small or supplier and saying, hey, look, we're going to buy all your pencils. Right? If you or I go to them, we can't afford to buy their entire inventory. We don't move the market like that. With penny stocks, you're not going to see institutionals hold a lot of these shares. So what happens? It becomes most of the pump and dump of the stuff you see. It becomes people having to create rumors, write stories, journalists writing stories, people paying to do this. And this happens, right? I've never been involved in this world because I've always traded futures, even when I was trading professionally, what I would consider professionally. And I've always traded the same set of stocks. So I've never had to worry about this. But I've met people and I've heard stories about this kind of world. Right? This chart right here, if you look at the bottom here, this is a insider kind of quote on dry ships. So only 66 institutions hold this stock. 66. That is ridiculous. So what this is reliant on is new people to hold the bag of this. Right? And I tell a story. I was trading 4 or 5 years ago. I held a position, part of a portfolio. I was at a fund. And it was, we did a deal. I can't go into too much detail on it, but we did a deal where we loaned the company money and it was a convertible debt note. For those of you who know what convertible debt is, they couldn't pay their debt, so they gave us shares to the company. So we had all these shares and we were trying to get rid of them, and it was very inexpensive stock. I think it traded like less than $2. So I was just searching one day and I found this trading forum. It's actually a pretty popular online stock trading forum. And there were guys in there posting and they had found that we had held this. And it wasn't me, I worked for a fund, I wasn't one of the partners. And they were making up all these rumors, right, of this news. And I'm like, none of this has happened at all. Like, it's not. I mean, the company that we did this deal with, or they did the deal with, it was in town. I'd see these guys, for lunch every once in a while, like at events. None of this was happening. So all this was made up information. Right? We had just held the position because we did a different finance deal in them. Right? We didn't really want to take the shares, but we did. So the point being is we want to hold large institutionally held stocks. Right? This was dry ships before it took off. Right? The stock was collapsed. Right? Then it had a massive run up. A year or two ago, the same thing kind of happened. Right? And I want to talk about this day trading concept. So there's this trader that shorted this stock called KBIO. He's actually in Arizona where I'm located, where our main office is. And he was shorting this stock that was like a $2 or $3 stock. Right? Why you would short a stock that's $2 or $3 when you have a slew of stocks and ETFs that trade so much higher is beyond me. Again, this stock was not institutionally held. It was held by a few major players. Right? Well, he was short this position, meaning he betted against the stock, which I'll discuss later in this slide. He'd ended up losing $106,000. He only had about $40,000 or $50,000, if I understand it correctly, in this position. Right? So we try to stay away. I stay away from institutional or non-institutionally held stocks. So really, I focus on the same 10 to 20 stocks each year. Right? This does not deviate. I traded the same set of stocks really since 2010. Nothing has changed. Right? There's been one or two that I've taken off the list. Potash was when I used to trade 2010, 11. It's not really relevant anymore, so I don't trade that. But GLD, SPY, Priceline, Tesla, Facebook, Apple, Amazon, Google, the usual suspects, I continue to trade, and I just trade them over and over. It's wash, rinse, repeat. Right? Do I have a speculative portfolio where I buy and hold stocks? No. At this point in my lifetime, my career personally, right, I'm not at that phase. Right? I don't buy and hold stocks. Last year I did on some oil stocks, but it was a generational kind of opportunity. But I really just focus on the same set of stocks. So finally, I day trade futures. Right? So if I want income strategy, if I want income today, tomorrow, if I want short-term trades, I trade futures. S&P futures, oil. There's a lot of upsides to this. There's no pattern day trading rule of futures. They move faster. I don't have to create a daily watch list. I don't have to worry about people making fake news about the company. I don't have to worry about press releases, earnings, none of this. Literally, it's just price on a screen. That's it. So I'll give you kind of a tip and insight. Find what works best for you. This is what works personally for me. I like this. It's continuing to work for me. It's worked in front of our students. I use this a lot. The biggest part of all of this, like I mentioned at the start of this slide, is your account size. If you're trading with $2,000 versus $20,000, it's entirely different. Right? If you're trading with small money, smaller, again, my best advice to you is not to even start in the market. The markets aren't going to go anywhere. They're going to be here tomorrow, 6 months, 8 months. You're better off, again, paying off any debt, getting another job, I saw this podcast the other day. Go around your house and figure out what's in your house and what you can sell on Amazon or eBay. Get rid of all this stuff. Sell it on Craigslist. Build up capital if you really want to do this. But don't come into this business thinking you can have $1,000 or $2,000, right, and make a ton of money. Now I say this in part 2 of this class we're going to go through is we actually had a student start with $2,100 and get to 30-some thousand last year. Right? It's a one-off success story. You don't see that a lot. I've done it with personal accounts where I've messed with, good challenge. I'm messing around 2,000 to whatever. Right? But it ends up, I end up pulling back on the account. You have to have capital to do this. Right? This is a business. When you start a business, you need money. Whether you have to go out and borrow that money or whatever you need to do, you're better off waiting till you're fully funded, coming in and trading the right strategy, trading the right stocks and doing this. So how do other people trade the market? So a lot of people use fundamental analysis. Maybe you do, right? Fundamental analysis is pretty cool. When I first started in the markets, before I knew anything about anything, I thought I could read balance sheets, right, and figure out what companies are doing. Today, companies are getting really, really smart. If you look at a balance sheet of Google or Alibaba or Amazon, it's really, really tough to figure out how they account for items. Right, so some people use fundamental analysis, right? They watch CNBC or they watch stuff. I'm not a fan of that personally. It's not something I use at all. Right? I'm aware of what's going on in the world. Right? But I don't look at a company and say, hey, earnings per share are this. Last quarter they did this in earnings, this, and this. That just has zero bearing at all on what markets do. Markets move on repeatable price action patterns or price patterns in the market. If you don't believe me, you can go and take a look at Jim Simons of Renaissance Technologies, a massive, one of the most successful hedge fund managers in the world. His entire strategy hedge fund has been derived, and he'll talk about looking at price patterns of markets and using quantitative analysis to make money. Right? Not fundamental analysis. Right? Fundamental analysis gets you to Uber currently has a $25 billion valuation. Right? Something I disagree with. But again, that's a story for a different time. So number 2, moving average crossovers. Now you see this a lot on CNBC. They call it the death cross, the 50 moving averages, or moving averages in the marketplace. Some traders use this solely by itself. It's not something we use. I did use the 200-day moving average. I don't use them at all myself anymore. Gaps. Gaps are a certain tool in the market where no price is traded. This is something that I do use. Right? I use them on larger time frame scales, which I'll discuss as we go later. Now finally, 4th, and the notorious culprit of indicators. Right? I recently just saw this indicator somebody made up and they call it the alligator, something ridiculous. And you see them everywhere. Indicators of how some people trade. There's hundreds upon hundreds upon hundreds of indicators in the marketplace. Right? If you understand how markets work, that the sole basis of why we buy and sell things, indicators are really, really pointless. You just don't need it. You have to have a market understanding. Right? I'll discuss that kind of later as we go through this. So the main thing I use is technical analysis and market awareness, right? I have situational awareness of what's going on, and I just trade institutionally held stocks, and I trade them from demand to supply, from supply to demand, back and forth. That's all I do. Right? If it gets to resistance, I short sell at resistance. If it gets to support, I buy support. That's it. Right? Now, obviously, it sounds easier as I'm saying it. There's things that go along with this. So technical analysis works on high volume stocks. So there's a reason I only trade institutionally held stocks. Right? Large volume stocks. Because the technical analysis has a better edge when those stocks move. Back testing I've used for almost 8 years now. There's a better edge with that. Penny stocks do not have large volume. Penny stocks are not reliant on institutions buying or selling them. They're reliant on people pumping them, fake newsletters, fake ad campaigns, so that you can pump these things and get out. Right? Can you make money doing it? Sure. But why, in my opinion, would you play in such a risky market when you have a market literally right next to you could trade that you don't have to play kind of musical chairs with? Right? So it's very, very tough to use technical analysis on penny stocks or stocks that have a lot of volume. So tip, learn this concept called support and resistance. Support and resistance, like I just discussed, is something we use all the time. We call it supply and demand here at Landshark. Right? When we use support and resistance or supply or demand, before the stock or whatever we're trading actually gets to the level that we're looking for it to get to, we already know where we're looking to buy or sell our positions. Right? I'll give you an example right here as this market's actually working. I'm making this video. Right now, this is S&P 500 futures. I already know before I get into this, as I get to 2270 to 2274, this zone here, before we get here, I'm going to be looking to short sell this market. Right? So I don't have to sit here all day long and watch the price and worry about news and what's going on. I just say, as I get to these levels, I'm interested in making trades. It's the same here with crude oil futures. We had a large sell-off the other day. Before we got to this area, this was a level I considered supply in the market. So I knew when we were trading here at 53.60 that if we got here, I wanted to be potentially a seller of this market. If we get back up to this level, I'm not going to pay attention to this and do nothing until we get to that level, then I'll consider making a trade. So this concept of supply and demand or support and resistance is something that we use heavily, we rely on heavily in the markets. So number 2, know your risk in the marketplace. Let's discuss this concept of risk. So how much are you trading with? I mentioned this before and I'll keep mentioning. This really matters. When students come to us, whether it's at one of our conferences in Newport or Vancouver or Scottsdale, wherever we were in New York last August. Whenever they come to us, the first thing I say when we ask them is, what kind of capital are you trading with? This determines what financial products you can be trading in the marketplace. Again, let's go back to the real estate example. If you only have $20,000 or $30,000, you're probably limited to 1 or 2 properties. Right? You can only do so much. I'm not saying you can't not make money, but you're limited to certain products. So some people that have higher capital can trade shares. There's a higher cost to control more. So what happens is there's a tendency to go trade penny stocks or stocks that are less. And this is simple. You can buy more shares if the stock's cheaper and potentially make more. Number 2 is they go to shady offshore brokers, right? Some brokers will give you 3 to 4 to 1 leverage on your money. The problem is a lot of that money typically is not secured. They could close out at any single time, take your money, and you're without recourse. Right? Not something I'm personally interested in doing. Number 2, you can trade futures. Futures have low margins. You can control S&P mini future with $500. Other cool thing is there's no pattern day trading rule with futures. With stocks, you need about $25,000 to get it, or you do need $25,000 to get above this silly rule. Now there's a way to get around it. Instead of using a margin account, you can use a cash account. Right? You just say, hey, look, I want a cash account, not a margin. You can day trade. It's the easiest way to get around it. You know, whatever it may be, you can kind of get around it, I guess. 3 options. Right? Something I'm a big fan of. So I trade primarily options and futures. You can control more shares for less risk. In fact, the student in part 2 of this series we're going to discuss has been trading options, just moved into futures 6 months after. Has been killing it there as well. And there's a reason, right? First part of this, we talked about volatility, and he understands supply and demand in the markets. So options are a less expensive way to express your idea. So let's discuss this topic called level 2, right? Some of you may have seen this, and I want to address this in this mini class and discuss this concept of level 2. So if you've ever looked at like movies from Wall Street, or if you've seen people talk about level 2, they see their screens. A lot of people, in my opinion, have this kind of obsession with looking cool and being a quote-unquote day trader. Right? There's this myth that this industry loves to sell people of traveling and trading and the cars and all this stuff, right? But it tends to work with a younger generation. Right? And then all the flashing numbers, so you kind of feel smart and it feels like you're doing something important. That's kind of what this is. Level 2 used to work really, really well back before HFT came into the marketplace. What it is, it provides you real-time quotes from the market makers, right, to show you order flow in the market. And I can show it to you if you go to a stock like, let me go to Apple. I'm going to click this here. All right, these are already price levels I've had, by the way. I'm going to go to level 2. So this shows you where the market makers, where there's buy and sells in the order book. The issue with level 2, in my opinion, is with HFT, it's hard to figure out. You see how fast this moves? Orders get pulled from the book. Right? People will put an order in, they take it out, so it's hard to read it. So when the prop trading days in late 2000, you didn't have HFT. It was a lot easier to read level 2. Right. The second thing, it's very, very tough to read level 2 or even use it as a tool with institutionally held stocks. The reason is a lot of traders simply use level 2 to do this right here. They don't look at the price charts. They're watching the buys and sells, and they say, well, there might be a seller, so I'm going to sell some of my shares here. We simply do not trade like this. Right. If I show you a chart right now, let me go to Facebook actually. On Facebook, I have a price target on Facebook of 128. I already have a mark on this. Right? As Facebook gets into this level here, I don't care what level 2 says to me. Because I have a price target on this for this particular level here. Right? So whether I get 124.85 or 124.87 a share to me, I could honestly care less about that. What I care about is getting at or near where my price target is. Right? A few pennies or a dollar is not going to make a difference. And if it does, right, you'd have to look at your trading strategy, in my opinion. So we believe in this concept of PTAs, which I just showed you. We call them potential trade areas. So on Facebook, that 126 to 128 price area I just showed you, that's a potential trade area. Right? So we're in this trade. We've taken this trade. Before that even gets there, I already knew, hey, this is my risk. I want to take it to this level. If I get closer near this level, based on past technical analysis, I can give it a price target like that. And if some of you are watching this, like, yeah, how is that possible? It's based on technical analysis. Right? So I already know where I want to sell this position, these calls, before it actually gets there. Right? That's the idea with that. Right? Same with oil. I was trading oil last night. If I can pull up a different chart here, I can walk you through the oil setup on this. I was watching this, and I was also watching S&P, like I mentioned. Right before S&P's even got to this level, right, I already know this area right here, I'm potentially looking to short sell this. I'm looking to potentially maybe bet against this. I won't now because of the video, but at this area here, before we've gotten here, I know I want to be a potential seller. Right? So I don't need level 2 to tell me where there's going to be supply or sellers in the market. Right? So it's just not a tool that we use. It's a big misconception that, again, has been pushed and been taught by the educational market, or by really on YouTube. I see a lot of it, really. I think because it's something traders think they need to know. Right? It's not something you need to know in trading. Literally, this is the extent of it to what you need to know about. So let's talk about this next tool, this concept called scanning, right? How many of you have day traded in the markets and you're looking for a scanning tool, or somebody's trying to sell you a scanning tool? You got to look for all these screeners. If you look at Thinkorswim or E-Trade or Charles Schwab, or, there's all these different criteria for finding a stock to trade and what it does, right? So part of scanning is what it is using a predetermined criteria to find a potential trade. Right? Stock scanning, in our opinion, is a myth. This is our opinion that it's just a myth. Unless you're looking for like a home run stock or some FDA approval, scanning for stocks is a myth. Right? This constant idea that you have to put a criteria to find these stocks, a new stock to trade, that you've always a constant work struggle to find something to trade and look for these ideas, it's a myth. Right? If you follow 10 or 20 or 30 stocks, at any given point, they're going to be in resistance or support zones, right, at least once or twice a week. So this gets away from this concept. Every day you got to be your trading computer, and you got to have a trade every morning. You got to be watching the market. You got to sit there, right? Some people like that. Some people like this idea. We're going to get into the life of kind of day trading. Some people like this idea. I don't. Right? It's not something I think is necessary. I mean, how many hedge funders, the larger guys, obviously they trade with bigger money, how many of those guys sit at their desks all day? They just don't. Right? So the tip is focus on small amount of names and maybe one futures product. So you don't have to scan. So your extent of scanning becomes, okay, I just showed you E-mini trade. I'm waiting to short this. I'm long on Facebook. I'm long on the CELG position. So before price gets here, I've already have 3 or 4 trades in my pipeline. Right, 3 or 4 trades, if they're executed properly, if I have the right amount of size on them, if I exit and scale out of my positions properly, those 3 or 4 trades are enough to make a really good trading week or a really good trading month. Right? I don't have to sit there and have this go impulsive nature of buying and selling, which a lot of people in this industry have. Right, that there's always this now concept. I gotta buy, I gotta sell, I gotta get out before I lose the price. Somebody's always out to get me. This kind of concept that you see. So let's talk about streaming news. So streaming news, if you've ever seen this, is kind of like a squawk. Do you actually need this to day trade? So some traders use this thing called squawk boxes or streaming news. Right, I just don't believe in it because, and I'll explain again why. When a piece of news comes out, I don't make a buying or selling decision based on that news. I don't make impulsive trades. So let's say, for example, Apple comes out and they're like, oh, Apple's, some iPhone caught on fire and the stock's down and I want to short sell it for a quick 5 cents. That's not what we do. Right? What I do is I already have predetermined levels of supply or demand, knowing where I want to buy or sell things. So the news has zero bearing on what I'm doing as a trader. Now, a lot of new traders, as you're finding your way as a hobby and you're kind of coming through this industry, you'll get into this, right? It's kind of cool when you sit there, because I did it when I first started. I had like a streaming news. This is way back, 2007, actually on Thinkorswim. They had the Futures Cast. And the Futures Cast was a live audio stream from the S&P 500 floor. So when I was like 21, and I would listen to these guys, and it was cool to do because when I was out of class, I could listen to it, and it was kind of a hobby. It was just fun to listen to. But as I've gotten older, it's not something I can use to help me to make money. So I just don't really use it. So let's move on to this concept of choosing a broker. So the top right's a picture of TD Ameritrade. TD Ameritrade is one of our partners at Landshark. So with us being a partner of them, we use their platform. Our students get a discounted trading commission on options. So when you come and trade with us, we can give you a discount to our group rate. And there's a few other cool benefits as well. So there's a lot of brokers out there. This is really, really simple. A lot of people have this question: which broker should I use? Right? You need a trading platform. You're going to need charting, right? You're going to need execution, and you need good commissions. A lot of people are always worried about commissions when they trade, right? This is 2017 now. Most of these people today, most of these brokers are pretty much give or take alike. You can't have one broker that's $10 and some guys like, hey, it's 40. They'd be out of the marketplace, right? Back in 1985, 1990, 95, there's a different story. Most of this stuff is the same today. Right? It's a free trading platform. We use thinkorswim, and I'll explain the platform on another slide. You don't have to pay for that. The data is free, which is awesome, which didn't always used to be true. Back in the day, day trading, level 2 data, charts, price quotes, all used to cost money. The other cool thing is you can use a free simulator. I've seen people charging online to use a trading simulator. They have literally a free trading simulator. Put $5 in the trading account. You can trade with a free trading simulator. Make $100,000 or $1 million, whatever you want. You can trade on simulation as long as you have cash in a live account there. Right? I would highly suggest staying away from offshore brokers. Right? If you're looking to leverage your money, again, you're best off using options or using products that already have that type of product in it. So your trading platform, your software, this is free. Right? You don't have to go out and pay for trading platforms or software. thinkorswim, I've been using since 2007 before TD Ameritrade bought them. That's 10 years. Right? The charts are extremely fast. The price quotes are fast. The execution is amazing. And let me touch on this concept of execution. Unless you're trading large size in futures, we use a different platform for futures trading than TD Ameritrade. Whether you direct route it or you use smart routing doesn't make a difference. It's not going to make a single difference in your trades as a retail trader. If you're trading hundreds of thousands of dollars, maybe. But for most of us watching this, we're probably just making 5, 6, 7 trades a month. You're getting into this. It does not matter at all to you. It matters you're running HFT or different programs. Second point, I see this a lot online. You do not need hotkeys to trade with. Right? Hotkeys are this concept where you can press a button, instantly gets you in a trade. It's just not like that. thinkorswim, right? If you want to get fancy and you want to discuss this concept of hotkeys, already has this built in. It's called Active Trader. Right? You can mess with this and go through and, do whatever you want. Change this here. You can go to the big buttons tab, right, and mess with this. There's all this stuff is available to you. Right, so you don't really need hotkeys to trade with. It's just kind of a myth that I've seen perpetuated in the marketplace with futures trading, and I do have my futures order book up briefly. Let me see if I have this up. No, I don't. I have it closed. But on the futures side, they have a thing called hotkeys as well. But it's already built into the platform. It's a one-click touch. It gets you in and out of the trade because sometimes futures will spike pretty quickly, and you want out of that trade instantly. So number 3 is we have discounted commissions with TD Ameritrade. I can't discuss them, what they are, but with our group we have discounted trading commissions. And the best part about this, you should never, ever, ever, ever have to pay for trading software today. It's all free. These brokers want you to trade at their firm and take your out. They want the AUM at the firm. The platform is now free. Right? I assure you, I've looked at every trading platform. I've used at Bloomberg before. Even when I used at Bloomberg a few years ago, I still use thinkorswim's charts. Right? Now, this is different for futures trading. We use a different platform altogether because we need faster execution on the futures side. And we do need different margins, which TD Ameritrade does not provide us. So we're going to go over this concept. This is a TD, or the E-Trade baby, rather. And we'll go through this concept here and discuss a day in the life of a trader, right? So hopefully that's not your day in the life of a trader. But I want to dispel some rumors and get rid of this notion of what you see out there, online about this. So A day in the life of a trader. So I'll give you my particular trading life and kind of a day, and I'll walk through this. So my day really starts about 8 a.m. Eastern, right? If it's the summertime, I'm up about 2 a.m. Eastern. I'm trading oil in the morning when the London market's open. But typically, if I'm in a supply or demand zone, if I know a stock is ready to be shorted or to be bought, I'll be at the computer at 9 a.m. to 11 a.m. Now I have to be there to be in one of our chat rooms to talk with students, do some other stuff, but I'm always at the computer. I never trade past 11 a.m. Right? 11:30 Eastern is when the European markets close. The European markets provide a lot of liquidity and volume to the U.S. market. So when they leave for the day and they shut down for their day, the volume tends to get very, very slow. Right? A lot of the orders middle of the day are not very fluid. It's very tough to trade middle of the market of the day. Right? The futures trades that I make are pretty much done from literally 9 a.m. to about 10 and I'm done. Let's say I'm buying a trade. So Facebook this morning, I put a position on and that's it. I'm waiting for the position to get to, 127, 128. So I have a stop on it. I'm probably not going to look at the stock for 3 or 4 days until it gets to that level. That's the extent of my trades. So from 11 a.m. to 3 p.m. is a break. There's nothing to do in the middle of the day, right? I don't sit here and look for breaking news on something or sit there and day trade middle of the day. There's just nothing to do. I don't want to sit and look at price charts all day long, right? That's not what this is, right? For some of you that are doing this, I'll tell you there's a time where I was like 2 years in, every day I would just sit there and look at price charts, right? You want to do your best to break out of that mode and get out and try to be active and not sit at the screen all day. Number one, it's awesome to get away from the screen or take a break, because if you've ever been on a losing streak and you come back after a couple of weeks, you can think fresh, you're clear-minded, right, and you come back at this. At 3 p.m., I do come back and I start looking at the market, right? Let's say I'm long Facebook. I'll take a look and see maybe Facebook got to a price level faster than I thought it was, and then I'll close my position or make adjustments in the last hour. Right? Or let's say, right now in ES, the S&P futures, if I'm going to get to the sell level end of the day here at 3 o'clock, which is in 4 hours here, I may put a short position or bet against it for tomorrow. Right? So let me give you a tip on this. You don't need to be tied to the screen. You don't need a daily watch list. This is false. You don't have to create a daily watch list every single day and scan for stocks every single day. Right? You're working too hard if you're doing that. All of your analysis, right, everything you're looking to buy or sell or to trim or to add to should be done Sunday or Saturday. What I mean by that is pretty simple. Right? If I go to S&P, this is my main chart. I can actually pull the main chart on this. If I go to S&P here, if I go to the futures side, and there it is. Right? I already had this analysis done on crude oil. Right? In a video right now, I'm in a position on these options. I'm down a little bit on this small position here. I'm going to go to the video real quickly on this. And I'll walk you through what I'm on this position. Not to discuss, but I want to show you what I try to do to prepare my days. So right now I'm in a position on these puts for the video, right? It's still not showing for me for some reason. What chart did I have it on? Just a moment. I have it on red. Okay, so there we go. I'm going to tie this to red. Right now I already have sell orders in. Right, so I bought this position on NVIDIA, the stock on the left here. Right, and I already have sell orders sitting on the stock. I already know where I want to get out of this position based on these moves. Right, so when I look at this, I already have the idea. I don't have to sit here and watch this all day long. I don't have to create a watch list. Right, when NVIDIA got to a certain level yesterday, and I was talking about this in one of our main classes last night, when we got to a level, I started to short this. Right, so I didn't have to create a daily watch list. I just knew when I got here I wanted to be short on NVIDIA shares. right? So this concept of a daily watch list, even on this futures trader, right? Probably end of day on this futures trade, I'll probably be looking, this isn't my main chart, I'll probably be looking to get short end of day on this. This isn't a trade recommendation, but again, this isn't a watch list. This was created on Sunday. I knew where these levels were before coming to the marketplace. So let's discuss this other concept and move on to the chapter of technical indicators. So technical indicators tend to be lagging, right? There are literally hundreds, if not thousands, of indicators in the market. This tends to be a trap many fall into, right? I'll tell you this and be pretty straightforward and walk you through. We've had students that have gone through programs that have still went out and bought indicators, right? I had two of them try to send it to me. I'm like, I don't want them. I'm telling you, I've been at this for 10 years straight doing this. I've seen everything under the sun. Every year, some new person comes out and says, I have a new indicator. A lot of what it is people take an indicator, they call it something else, but it's really something. Or, it's just an indicator they think I've used them all. It's not something that I personally believe in, right? I love Fibonacci, which you saw some of the charts. I use price candles. I really use 2 price candles. We use dojis and engulfing candles. That's it. And I rely heavily on price charts. We believe you can determine with a great amount of accuracy market turns from price charts. If you can understand a price chart and how to read it, you can trade anything in the world. Right? Markets move from supply to demand, from demand to supply. That is institutional style trading in markets. Right? It's not some magical indicator. That's not what this is. If you understand and you put in the work and time to understand how to read price charts and read a market and understand what price charts are, you won't need indicators. Finally, market profile. A lot of professional futures traders use this trading with market profile. I don't use it anymore because I don't trade the same amount of size positions I used to, but I used to use market profile as well to trade with. So stock earnings. Let's talk about this idea of stock earnings events. So stock earnings. Companies report 4 times a year, right? So every quarter you're going to get an earnings report from a company. This news creates great opportunities. My favorite time of year to trade is during stock earnings. So price charts typically price these events in. For options trading, these events can be awesome. Right? I mentioned this earlier in this kind of presentation, this class. My biggest trades have come from earnings misses or earnings beats. Right? Typically, I'll position myself 1 to 2 weeks before earnings on a bet of whether the stock is trading higher or lower. Those bets, those ideas based on technical analysis still. Right? I love stock earnings. One of the misconceptions you see with people who day trade shares, they say don't ever hold earnings into earnings. I would agree with them. Even if it's 200 shares, why would you hold into earnings? There's too much risk. But with options, right, and it amazes me to see this in the educational space, why these guys, right, and maybe some of them are watching this video and will use this, why they don't just if you're long 300 shares of Apple in earnings, why would you just not have bought call options as well? Get rid of your option share or your shares and hold the options in earnings instead. Right? Your risk is mitigated with options. Right? You know what you can lose before the trade's made. With shares, you could gap down, your stop won't get hit, there's different situations. But a lot of my additional speculative strategy, right? My strategy is trading support resistance, that's it. I have an aggressive strategy, it's earnings. When earnings come around, I try and trade these events because I get large, massive price moves. Right? Priceline, Facebook, Google, Amazon, Netflix. You get insane moves when earnings are in the markets. Right? If a stock misses, it causes massive gap downs. If they have unexpected news or earnings, you get a massive run up on the stock. Right? This is really good opportunity to trade in the markets if you understand how to use this as one of your strategies. So finally, price charts. Let's talk about this concept of price charts I've just discussed. So, like I mentioned, I really only focus on candles. I don't study them a lot. I focus on 2 candles. Right? That's it. And supply and demand. I don't look at 50-year stock charts. I don't care what happened in 1936. I don't care what's going on with news. I look at a price chart and I try to determine where there is going to be resistance or support in this price chart. Right? We never, ever, ever, ever use a price chart below a 60-minute time frame. What I mean by that is this. If I look at this price chart right here, right, I have a 4-hour price chart. Remove these so it's a little easier to see. Right, typically, I look at something like a weekly, a monthly, a daily, a 60-minute price chart. You can't see what's going on. If you're looking at a 5-minute or 1-minute chart, it's going to be very tough for you to trade these markets. Because every one of those little gyrations you're going to want in and out. You're not going to be able to handle the ups and downs. You're always going to be getting in and out of trades. This is why a lot of traders fail the markets, because they see the market from a street level view. They can't see it from a 30,000 foot view and see the larger picture of what's trying to occur. Here's my Facebook chart. This is actually my real one. So I already had a price alert on this. I already have a target on this, a 120, 126. Right? What good does it do me as a trader to sit here and watch a 1-minute or 5-minute candle unfold every single one of these? Right? A lot of people I've seen have been taught you have to watch every single candle, and you have to move your stop and watch the candle and move it up and move it, and it's just every one of these candles you have to determine analysis. That's just not how I trade. It's not how we teach our students to trade. Right? I have a price target here. Past price action patterns tend to repeat in the marketplace. If you accept that as a reality, as a truth, you can put on a trade like I have, walk away and come back when I get to 127, 128 without sitting here, right, like a detective and watching every one of these 1-minute, 5-minute candles unfold. This plagues a lot of traders because they don't have price targets or an understanding of how markets move. So large time frames, monthly, daily, weekly charts give you a great supply and demand. That's where markets tend to move from. Number 2, you have entry time frames. Right? For entries and exits, we adjust to a smaller time frame, but we focus on larger 30,000 foot view. Right? Institutions, when I trade an institution, when you look at institutional trades, they look at large price targets. Right? When a mutual fund buys something, they typically have a larger price target than a day trade for 20 cents on a 20 million share position. Right? They have a larger price target. Those price targets you can see on larger price charts. So price charts give us that data. Price charts for us, for me, are the quote-unquote holy grail. I have to have a price chart to make my buying and selling decisions in the market. If I had a price chart of real estate, I could make a buying and selling decision with an additional few things to say this might be a supply, this might be demand in the marketplace. So let's talk about why traders tend to fail. We've covered a few things in this class, and we're going to slowly wind down and wrap this up. So find a strategy and stick to it. If you have a strategy that works, keep doing it. There's no reason to change. But what you want to do is you want to stick to a strategy. Most traders tend to fail. That's a fact of trading. Right? There are traders that do extremely well, and there's key traits of traders that do well, and I'm going to go through some of them. First and foremost, traders have zero plan. I can't tell you how many times, and I still see this, where traders get into a trade and they have no price target. At our free workshops and some of our trading 101 classes, we hold some people, hey, what do you think about this stock? We ask this question, and I say, where's your price target? Every single time, they say, I don't know. And they know that when they say it. Right? If you own a store, right? If you're a chef, what's the movie The Big Short? And they had one of the chefs in there, and he was discussing something. If you're a chef and you buy seafood for a price, you know how much your cost to prepare it and to sell it is. You know where your exit is. Right? If you own an Amazon business and you buy 50, coffee mugs, you know where your margin is. Why would you not have an exit for your trade, your investment in trade? A lot of traders literally do not have this. They buy it and pray and hope that it's going to get to a level. And that's a huge number one issue. I don't know why that is, but that's huge. Right, on Facebook, I already have price targets. I have 3 of them. In case it doesn't get to price number 3, I can take some of my position off at moderate target number 1. Number 2 is people just don't have education. This is a big issue as well. Right, now a lot of people, let's be honest about it, a lot of people don't like educators, right? A lot of people, I'll have cynics. I don't care. I'll meet a lot of them, right, that have said things. I meet them and their opinion changes. Right, a lot of people don't like me because I do this. I have a lot of friends that trade institutionally still that think they don't like what I do. Right? I just don't care. Right? Our traders do extremely well. We've had students do extremely well. I like doing this. I like to teach people. I like to see the success that comes from this. Right? A lot of people just don't have education. Or if they do, it's really bad. Right? It's stuff like you have to learn level 2, or I'm going to make up a fake indicator and you're going to use this indicator because it works. Or you should be day trading stocks and you should have a daily watch list. It's bad education. It's not right. This isn't. There's a way to do this and there's a way not to do this. Right? But first and foremost, there's no education. Right? Can you find a lot of this stuff online for free? Can you learn? Yeah, if you look hard enough, you can find anything. Right? From all over YouTube and the internet. Internet's an amazing thing. Right? But people don't have education. They jump into this and they test it. They lose money. They come back. They lose some more money. They read a book. They come back. And there's just no education to it. Right? Number 3 is not enough capital. This is important too. You need money to do this. Right? If you don't have the capital to do this, wait. Right? A lot of the inquiries we get is I have $500 or $1,000. It's not enough money to do this. Right? Go around your house. Sell stuff you don't need on Craigslist. Sell it on eBay. Right? You need money. Get another job. Build up capital. And when you do this, make sure this money is money you can afford to risk. Don't come into the marketplace and have this be the last $10,000 you have. And if you lose it, you can't live. You can't pay your bills. You can't take care of your family. Don't do that. Right? Don't take that chance. Have a backup or make this a side business. A lot of traders I know have other companies. Right? I'm invested in a few vacation condos. I've done an investment in another web property that we sell housewares. I have other income streams aside from this. Before, when I was trading professionally, they gave me a salary plus I got part of a bonus on what our desk made. Right? So I had a guaranteed income. You need to have other income with this. Right? Don't just do this and come out and think, hey, I'm going to make money, 3 months in. It's not going to happen. It's not real. Right? I have a crazy story we're going to come after part 2 where a student did 2,000, like 30,000. Right? We had a crazy story last year. This trader made 18,000, turned 140,000 verified in like 20 days. He sat right next to me, so there was an addition. He had help with that. Right, but he still works another job. Both of these guys have other jobs. The gentleman who made 120,000 drives a truck every morning for 4 hours, then does his trading. Right, he takes care of his family. It's not his full everyday kind of thing. Number 4 is no patience. Right, this plays a lot of traders. Right, they're simply just don't have patience to do this. Right? The lack of patience comes from, in my opinion, not understanding the marketplace. If you don't understand supply or demand and how markets work, or you haven't seen price action enough to see repeatable patterns happen over and over, you won't allow the trades to work in your favor. Right? That's not something you can learn. It takes time and you sitting in front of trades and being in hundreds of trades to finally get to that point. That's not a repeatable process we can teach you. Right, but patience to not trade live when you've only learned for 1 month is a big deal. The markets are not going anywhere. Are you going to miss trades? Yeah, I'm missing this ES trade as I make this video. Right, but I know there's going to be another trade tomorrow or next week. There's always a trade. There's always opportunity in these markets. So, what's a tip? You should be trading on simulation if you're new for 60 to 90 days. Right, don't rush this. We have a class called Core Foundations. Every class I have to say this because last year we had 2 students. The second day after class started trading live. Thank God these guys made money. But they were like, oh, I can do this, right? If you have the capital to do it and losses aren't going to make you upset and ruin your entire day and you have money, you're doing another business, you're an entrepreneur, whatever it is, obviously go after it. If you have disposable income, do it. if you're going to try and make this something that you're serious about, wait. Right? After you're on simulation, trade quarter size. What I mean is, if you're going to trade $1,000 size per position, for the next 90 days after simulation, trade $250 per position. Because trading on simulation versus trading live is two entirely different things. So what you want to do is, after you come off simulation, trade quarter of the size and see how you react emotionally and mentally with real money in the line. See how you react to a loss. Or see how you react to, okay, I made a trade, I'm in profit. Am I actually going to stick to my trade plan to take my profit at my price target? Right? Go through that. What you don't want to do is start trading full-size positions, deviating from your plan, lose some money, like, man, I didn't follow my plan. You slowly ease into this, and then 6 months, 8 months, a year, 2 years in, you'll be on your way. So small wins. I'm going to show you this email I got from a student literally 4 days ago. Right? And this isn't one of those success stories you see all these guys preach online, that this is easy, it's possible, driving in rented Lamborghinis, rented mansions, flying around, and stuff that isn't yours. This is real life stuff here, right? So I got an email from a student that said, hey Dan, I left a review yesterday. My mind was a little slow that day, but the review I felt was very positive. I'm very happy with the earning process and the teaching process Landshark offers. And I'm looking forward to class this month. Just to let you know, I started $5,000 in my account and I'm currently down $700. This is by far the best I've ever done. Usually I'm broke after 6 weeks. I think this is pretty good considering I make about 95% of my trades on my Android. So my goal this year is to take better notes with me to work and work on setting alerts. That's about it. See you in Core Foundations of Trading. Right, so let's review this briefly. Right, the first part I'll talk about is the process. Right, there's a learning process, and I really believe in how you learn in a process to this. Right, and there's a teaching process you go about doing this. Right, I'm not saying right off the bat whether you enroll one of our programs or another program, you're going to make money. Right, I had to sit for about 6 months next to somebody and watch them as I was doing this. I didn't trade, I just did, okay, do this, look at these charts, fax this, go get me this, whatever, and I just learned. Right? Second part, he started with 5,000, he's down 700. He was up at one point. Right? Now, he's not currently profitable. That's okay. There's nothing wrong with this to start. We have students that are extremely profitable. And the reason I'm showing you this is I want to show you the other side of this. Right? He's currently down $700. Right? Not too bad. When he came to us, his goal was, and I think he said he was planning on retiring 5 years. He started his education now, before retirement. Right? So he's going to be learning as he goes into retirement so he can have another supplemental source of income. Right? So when I look at this, and I've seen some of his trades that he's discussed, right, he's been up and down. He hasn't caught a groove yet, but he will catch a groove. But what he's done is he's sticking to a process. He hasn't blown a trading account. He hasn't lost $1,000. His P&L swings aren't wild, right? He has a process. He understands this is a process, right? And he's being patient with this, right? And that's the number one thing I think a lot of traders have to understand. You have to tune out Twitter or stock twits or a lot of the emails you get from these guys saying, oh, I banked $5,000 today, right? This is a marathon. This isn't a race. You have to trade for you. Don't worry about what so-and-so made. Right? It's the same thing with me. People ask, like, what's your strategy? That's my strategy. I do what works for me. What works for me may not work for you as a trader. You have to figure out what your risk thresholds are. How much do you want to make? Right? What are you trying to do with this? You have to figure that out. But small wins and understand there's a process to this makes a big difference. So I love this slide, and I love Allen Iverson. If anybody doesn't know what this is, you can Google it. I thought it was hilarious. I'm a big basketball fan, so. He talks about this concept of practice, right? And so it was really funny when you saw this video, and I laugh about it now. But you have to practice this stuff, right? The more time you see price patterns play out, the more earnings events you're in, and you see, okay, this is what happened, you'll see it. I have students now, we have students in our group, like one of our guys, Ryan. He'll look at earnings now and be like, this is going to happen or this will happen, because he's seen enough earnings events where, okay, sorry about that, the computer line was ringing there, but he can now look at earnings events and say, hey, this is where the stock could trade to, right? And he can say it with with pretty good accuracy. If we miss on earnings, we'll go. If we hit it, it'll go there. You should always have an idea, right? You should be able to find supply or demand, support, resistance, and see where you can be wrong or right. Right? That's how important price chart is. Price charts. You have to understand charting. Number 2, trade on sim. Go through the process, right? The last video I showed you a part of practice. Right? He will get there. But it's not a rush job, right? He's not saying, man, I'm not making money, I'm not up $15,000, $30,000, but he's trading live, he's getting the process done. Right? Most people won't put this in. Most people just won't do it. Most people want to be told, buy this stock, sell this stock here, and make money. Right? We used to have an alert service. I got rid of it because the in and outs of people, right? You know, one month we'd have great trades, some months we wouldn't, and that's just in the market. And then if you miss a couple of weeks, everybody wants out. If you're hot, they want in. So what happens is the type of people you get are people who aren't really serious about making money. They just want something to do, right? Trading's a cool thing to do for people that have professional jobs and work every day because it's something that's fun and it gives you something to look forward to. If you're serious about this, if you're trying to make income from this and make this something that is viable, right, you've got to practice. Number 3, keep a journal. Super important. Write down why you took the trades, what you were thinking, and go back and look at them. So that's it. We're going to wrap up the course. We're in a little bit overboard. I wanted to keep about an hour and 10 there. Sorry for the call that came through on that. I hope you use these tips, go out and begin your trading experience. We have more presentation tips relevant to other types of messages. Go to landsharkeducation.com and attend an online webinar or one in a campus near you. We have campuses in Vancouver, Canada, Scottsdale, Arizona, Newport Beach, California, Houston. Hopefully we'll be on the East Coast soon. We are opening a small office in Australia and Brisbane as well. You'll be able to go to a campus there, or you can just come to an online webinar. Also, after this, you're going to put a link on this. You can go to part 2. I'm going to show you how a student grew a small trading account using options from 2,000 to 30,000, literally full account statements. We'll go over some trades. I'll have him walk through what he did. So hopefully you learned something from this video. If you have questions and comments, leave them below, and good luck on your trading journey.